Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub, with your midday market update for Tuesday, the 10th of January. Finally, a major signal in the S&P 500 today. We look at how our trade trailers are viewing the S&P 500 and share with you how to use filters in your trading to enhance profits. We'll also be looking at three stocks on the move today: Life Technologies, Genworth Financial, and Tiffany and Co. And we'll look at how our trade trailers are viewing these markets and should you be buying or selling them. And also, the three stocks that hit our radar screen this morning, they are Lululemon, Athletica, Cirrus and Caterpillar. Yes, the big cat is back. We examine all three stocks today and show you how our trade trial technology makes sense of these markets. Now let's take a look at the charts with MarketClub's trade trial technology and see what's gliding and what's sliding. But first, just check this out. Are you looking to have one-on-one MarketClub personal coaching? Is it right for you? Give us a call today. It's a free consultation. It's 877-219-1482. See if it's right for you. The call is free and the consultation is free. This is Adam Hewison. Check out one-on-one MarketClub coaching. It could make all the difference in 2012. Now let's go to the charts. And here we are at our portfolio. And starting with our S&P 500, well, guess what? It's a plus 100, meaning the trend is up. So let's go to the chart right now. There's the monthly trade triangle that just kicked in at 1292.66. And this is the first signal we've had since September 17th, a buy signal. That's 2010. So quite some time ago, but certainly the market has made a turn. It's a little bit out of the box in terms of the Donchian trade channel. I would not be surprised to see this come back. Now, with monthly trade triangles, they can give you the big trend. Now, it doesn't mean to say that it's going to go straight up from here. Sometimes it does, but oftentimes you get the signal and then we sort of consolidate and then go higher. This could take a week, it could take a month, but generally speaking, the trend has changed. We're in a plus 100 mode, so any kind of pullbacks in this market, we want to be looking to buy and get long this market. So let's just look at the signals. You can see we've had a longer platform. We've had a number of weeklies. The weeklies basically what help you filter because we got out of this market at 1264. And you can see our main signal was at 1292. And these other signals are basically intermediate signals that we use to filter our trades. So before we had this signal here at 1292, we had a signal to exit the market at 1264, some 30 points lower on the down. Not a lot, but certainly an interest in the S&P rather. Not a lot, but certainly enough to make a difference at the end of the year. So let's go to our next market. And the next market, of course, is silver. And we'll have a 3-month chart. And on the charts, I have obviously our Donchian trade channels, which we talk about quite often. And also we look at our parabolic, the PSAR, which is the parabolic stop and reverse, developed by Wells Wilder. And you can see where the upper ranges of the Donchian trade channel. This is developed by Richard Donchian back in the 40s. Very, very good way to look at the market. We just hit the top of that, indicating we may be making a turn, but chances are with today's weekly trade triangle kicking in, you see the date, the 10th of January at 30.18. The market's lower than that right now. And again, I think the longer term trend here is the one to watch. I think 33.15. I think we'll see more sideways action. We are plus 60, and we all know what that means. It's a trading range, and it's likely to continue. So let's go to our next market. And this is the gold market. Despite the rally from the 1550 area up all the way up to 1630. It's almost like it's a $100 rally. It hasn't really changed things much. Weekly and the monthly trade triangles, like both of these trade triangles, are negative. Right now, only the daily is positive, and we're right up against the top of the Donchian trade channel. So my expectations are that this market's going to come back down and possibly get to the 1550, 1560 level. But let's just give it some time. I'd like to see the market go through 1600 on the downside. I have a little more confidence in that forecast. We are overbought, and we have a potential bearish divergence. You see, we haven't made new highs based on today's action. So, excuse me, let's see how that plays out. So let's go to our next market. We have a lot of markets to cover today, and this is the copper market, the March copper contract. And as you can see, this market's been going sideways. Excuse me, I have something in my throat. We also can see that the parabolic is just above the highs of the day and was not hit with a rally. This is where resistance comes in around the 350 area, and we're just now getting into a overbought condition. You only have to look at this market for any length of time to see it's really kind of just gone sideways. It really hasn't gone anywhere. It's probably building a big base, but generally speaking, you've had these ups and downs, ups and downs, ups and downs, and I think generally speaking, we're probably going to remain in that trading range until we get something really clear and above the 370, 380 level on the upside, or certainly below the 320 area on the downside. So let's see how that plays out. But generally speaking, plus 60, it's a trading range. That's what we're saying. So let's go back to our portfolio. I beg your pardon. And let's see if we can get some other markets to look at. And we're going to be looking, the next market we're looking at, of course, is crude oil. And crude oil is once again a plus 90, very strong upward trend. However, the little bit worrisome is the fact that we made a 4-day low here, and we haven't really got excited on the upside. We're still below the parabolic, and you can see the parabolics are right here. They're showing right here. As you roll over the different days, it shows you the value of the parabolic. So if we go here, it's going to show you 103.74, and of course today's high was 103.60, so it didn't quite get there. So again, I think a little bit of caution here, but the longer term trend is positive. We think this is going to become, or is, a big energy field. We talked about this yesterday, I believe, but this is a big energy field to really capable of pushing this market much, much higher later on, possibly towards the $120, $130 area. So let's see how that plays out. And let's clear the screen again and go to our next market. And just the markets are we're finally getting out of the silly season. We talked about it before, which starts around about the middle of December and goes about the first week or so into January of the new year. Traders are becoming back. Everyone forgot about Europe today and they said, okay, well, let's push the market higher. There's some more kicking the can down the road in Europe. They haven't qualified what they're going to do in my mind yet. But the markets, don't worry about it. Go with the market. It's much easier that way. We are plus 85 on the dollar index. Still a positive market. The weekly and the monthly is still positive. Only the daily is negative. And we still see this market in an uptrend, meaning the dollar should continue to get stronger. Where I think we have we had the 81.50 target zone, which is the one thing we've hit. And we're a little bit, once we hit a target zone, we somewhat pull back a little bit, get a little bit more, let's say, defensive, for want of a better word. But generally speaking, the trend is still positive in this market. You can see our parabolics is below the market, our trade triangles are green, and so I would really, for the most part, approach this market from the long side. So next market is going to be the CRB, Reuters Jeffries CRB Commodity Index. I always call it the CRB. That's old habit. But you can see it just popped over the 15 level, actually made a new high. But what was interesting to me is that you can see we actually moved over the parabolic back here on the, I think, what's the date we had there? I think it's probably sometime in December 21st. Again, in the middle of silly season, and moved up. And here we are. We've popped over the Donchian trade channel. I think there's a good chance we'll come back into that trade channel. We also have a situation where we're overbought, and that's always a situation that's somewhat tenuous. But the longer term monthly is down, the weekly and the daily are up, indicating more of a trading range of plus 60, which means we should probably come back in this trading channel in this index. So let's see how that plays out tomorrow. Generally speaking, if it closes below, I think 314, which would be very unusual, I think, for the most part, I think that could be a little bit of a negative for this market. Now, looking at the euro, we had a poll up on our blog today about the euro. Do you think it's going to go higher, or do you think it's going to go lower? The overwhelming consensus, I believe, the last time I looked, was a minus. More people thought the market was going to go down than go up. And I tell you what, let's just take a look at the that poll right now. We can do that, of course, with our technology, and this is part of the blog, and let's just scope this down. Again, the personal one-on-one coaching, if you have that, and I'm going to scope this down. Oh, you're bearish. Let's just review results. So we have 465. This has only been up a couple of hours. 465 people have voted, and you can see 70% said lower against the dollar, and 19% higher against the dollar, and 11% said we don't trade Forex. So again, you are seeing a preponderance of the public thinking or the traders thinking it's going to go lower. And we could be right. They could be right. So let's take a look at the charts themselves and see how our trade triangles are looking on these markets. And as you can see, the monthly and the weekly are negative. And you can see we've had a little pop today. But this is not enough in my mind to get this market going on the upside, particularly if we close towards the lower part of the range. And we've had a range so far today. Now remember, we close these markets at midnight Eastern Standard Time for our purposes. And we've got a long way left to trade, some 11 hours, 10 and a half hours. And the low today was 127.41. So we're 127.73. This is live. And so if we close towards the lower end of the range or even make new lows in the day, I think that would be a little bit of a negative for this market. But generally speaking, the trend is your friend, and the continued trend in this market is negative. And if we take this out further, and we can look at this on a monthly basis, and we scope this out for, let's say, a couple of years, you can see, and let's take the trade triangles off because they get, so you can see basically we've been going, really, we made the highs back here in the month of May, and we've been sort of just, that's 2011, by the way, and then we sort of just kept going down, 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 down. Now remember, last year, last year we think, okay, the dollar's going to get pummeled, and it certainly did for a couple of months, and then suddenly, bingo, things reversed, and the problems with Europe came into play. Now this is the key thing to remember with currency trading, is that when these markets get into a trend, whether it's up or down, whether the dollar's going up or going down, it can stay in that trend actually for months and months and months, in some cases years. So clearly you can see right now the trend in the dollar. This is the last month, this is the month of January. You can see it's new lows. This takes, you have to go all the way back here to August 1st, the month of August in 2010 to get a similar price. But generally speaking, the trend is clearly on the defensive. So I would say I would have to, for the most part, right now, vote that the dollar is going to get stronger and the euro is going to get lower. So let's go to our next market, but let's first go back to a daily chart. And we're going to go to our next market, and that's going to be, oh, I'm going the wrong way. Hang on. Oh, let's go back to the index. This is really easy to do. We've looked at the euro dollar against the dollar. Let's look at Life Technologies, which is one of the markets we talked about. There's a big move today, up 8.41% plus 100. And I want to share this with you because I really, this market, to be honest with you, just scares me. And I'll tell you the reason why it scares me is when you have a big range like that and you've got a very tight opening, just a high and a low right there in terms of the opening range. That is not a market I really want to get too excited about. I'd rather give this market a few more days and see how it sets up. But generally speaking, the trade triangles, you can see it kicked in today at 43.31. I think you could not have bought it at 43.31 because the market opened so much higher. It opened, let's see, 46. So 46 would be the best you could have done. The low is 43.86. So you could not have actually got this price. However, if you get a chance, it comes down the next few days, I think you'll have a chance to buy at that level. So let's see how that plays out, but I would not jump in to buy this market, not with my money anyway. So let's look at the next market in Genworth Financial. Genworth Financial is interesting. The longer term still remains negative. It's a big move up today. It's up 5.64%. It is longer term negative according to our trade triangles. Now, we've had the move up today. You go back here, you can see this is where the resistance is. So we back up against resistance. I'd like to see how this market performs later today and certainly tomorrow, because I think that's going to be one of the key levels we're talking about. So let's see how that plays out. But generally speaking, I prefer this market to the other market, which was the Life Technologies. I really think I would rather be playing this market, because I know where my stops are. The risk on the other one I think was just too great for my purposes. Now this is Tiffany and Co. I guess some of the glosses dropped off this market pretty rapidly. As you can see, we've been short this market from 66.48 on a monthly. We're currently trading at 59.95, so let's call that 60. But nonetheless, it shows you the last signal we had, and this is where you filter the trades. And I'm going to put the weeklies in here. So you can see how you filter the trade. 73.51 would have been a cover short position. and you would have got short at 74.22. So you would have actually gotten, because of filtering, you would have actually gotten a better price using the weekly as timing. So what we do, and this I explain how we trade stocks, and this is give you a very clear picture, unbiased, very clear picture of how we do this. So just give me 1 second. So this is how we do things. So this is the monthly indicator right here. So this is for trend. Okay, so the monthly is for trend. And this is the weekly right here. And this is for timing. That is how you filter your trades. I'm going to show you another example later on in a very big stock that had a huge move today, down 27%. I'll show you how timing is incredibly important in the markets. And don't buy the academic theory that markets can't be timed. That is hogwash. These guys that write these white papers do not really understand how the markets work. So here we are. The markets was down a bunch. Tiffany was down a bunch, and as you can see, we basically got short right here. So it's a nice trade to where we are right now. 74.22 down to 59. Let's call it 60. We'll be generous, 60. So it's $14 on a stock, which is not too bad. It's about a 20% return in a really short period of time, since about November 20th. So I think it's a nice trade. So let's clear the screen. We've got some other markets to show you, and we like to get as many as we can in the time frame. This is another Lululemon, Athletica. This scares me. I don't like to see markets have these sudden big pops without any. I'd rather buy if it closed at 62. I'd rather buy it on the highs, but not in the middle here. This is a little bit of a scary thing for me. So I would give this market some leeway and look at it maybe the next couple of days. So here's another one. This is the Cirrus, pretty much the same thing here. The difference is in this one is if we take it out a year or so, it's actually coming from a nice base. I'm going to take all the triangles off, and I just want to keep this very simple. And if you can see it's really made that turn. And this, I think, in my work would be a very large energy field. So this whole area right down here, this is a very large energy field. This was the resistance right here. You've clearly broken out to the upside. I think any kind of formation here in the next few days, and then I want to be long because I can put a pretty tight stop on this market. But generally speaking, it looks like we want to go higher. I would say a target zone from this would be somewhere in the 23 area, around here, 23 to 24, which takes you back to these levels back here, seen in the a year ago, right around the 23, 24 levels. So let's see how that plays out. Let's clear the screen off. We've got a couple more to go through, and we'll let you get back to your trading. So let's go to the next market. In the next market we're looking at is Caterpillar, the big cat. Like the way this market's acting. It's a big stock. You can see we've got this energy base in place right here. Sort of made that turn, and I like that. It's sort of cleared out over the top. It's a big stock, and if we just look at the monthly trade trials, one kicked in today at 98.20. It's 99.60, so that was very doable today, and that's a big stock. It looks as though it wants to go higher. How high can it go? I would not be surprised. We could take this measurement from here to here. So you're looking approximately, let's call that, round this off to 86 to, let's say, right here around 96. We'll just call it $10. So we can see the market go to the 106 area, the 110 area. That would be the target zone I'd be looking for with Caterpillar. And as you see, you get up to those levels, you're running into some real problems. So let's see how that plays out. Let's clear the screen again and go to our next market. And that's going to be WebMD. WebMD took a real hit today. And this is the one I want to show you how important filtering is to trading. So let's scope this into 3 months. And let's put a candlestick chart on there. Now look at, so we had a signal right here at 25.56. Now, the market is currently trading at 26.72, so you can actually short it if you wanted to short it. It's not what I'd like to do. I don't like to see big drops like this, but what I want to show you is this. If I put it on a weekly, we had a signal yesterday. There's the date, 1/9 at 36.56, it's right here, to exit long positions. How cool is that? How valuable is that to you as a trader that you would have avoided this is a 27% haircut you would have taken on this stock today had you stayed with it. If you were in WebMD, I should say. Basically, this is what the filtering does. It helps you. It's not right every single time, but it's right more often than it's not, and it will help you make money in the marketplace. Hey, this is Adam Hewison. If you don't think that one-on-one coaching is perfect for you, don't do it. But if you do, you want to give us a call at 877-219-1482. One-on-one coaching, it could be the best thing you do for yourself in 2012. This is Adam Hewison for Market Club. I will see you tomorrow right here on the Market Club TV channel, and we're looking forward to it. Have a great day trading.